Forex trading robots, often referred to as expert advisors or EAs, are software that automates the process of trading in the foreign exchange market. These robots are designed to remove the emotional aspect of trading, which can often lead to poor decision-making. By using predefined algorithms and trading strategies, they analyze the market conditions and execute trades based on these analyses. For beginners, this can be particularly beneficial as it helps in understanding market trends without the necessity to manually monitor and analyze the markets constantly. This automation not only saves time but also allows new traders to learn trading strategies in a real-time environment. Forex trading robots function on complex algorithms designed to detect market trends and trading signals. These algorithms are based on a series of technical indicators and parameters that guide the robots in making trading decisions. Once a potential trade is identified, the robot can automatically execute trades on behalf of the user, managing entry and exit points with precision. Additionally, these robots come equipped with risk management strategies, which are crucial in protecting investments. These strategies might include setting stop-loss orders, deciding on trade sizes, and managing leverage to ensure that trading is executed within the risk tolerance levels of the investor. Forex robots offer distinct advantages for traders. A primary benefit is the ability to trade continuously 24 hours a day, 5 days a week, harnessing opportunities even when the trader is not actively monitoring the market. They eliminate emotional decision-making, a common pitfall in trading, ensuring decisions are based solely on logical data and predefined strategies. Furthermore, these robots are adept at backtesting, allowing traders to test their strategies using historical market data before applying them in real trading scenarios, thereby increasing reliability. Consistency is another significant advantage. Robots follow the set strategy meticulously, ensuring consistent trading actions without deviation. Choosing the right Forex robot involves careful consideration of several factors. It's crucial to look for robots with a clear, transparent track record of performance, which showcases their efficacy and reliability over time. Evaluate the features offered, such as risk management tools, customization options, and the type of trading strategies they support. Understanding how these robots have performed historically in different market conditions is essential. Additionally, setting realistic expectations is fundamental. While Forex robots can aid in enhancing trading efficiency, they are not a guaranteed pathway to profit. Proper due diligence will ensure that the chosen robot aligns with one's trading style and goals. While Forex robots offer significant advantages, they come with inherent risks. One major risk is the dependency on the robot's algorithm, which may not adapt well to sudden market changes or unique events. Therefore, ongoing monitoring is crucial to ensure the robot performs as expected under all market conditions. Traders should not rely solely on automation but should intervene when the market dynamics shift significantly. To minimize losses, it's advisable to regularly update the robot's settings and optimize its performance according to the latest market conditions. Implementing strict risk management strategies, like setting stop-loss limits, is also vital to protect investments.